take you through the key highlights of the quarter and recent developments in the infrastructure sector, followed by question and answer session. During Q3FY24, the company has executed one HAM concession agreement with the National Highway Authority of India. Moreover, two concession agreements for one road project, one ropeway project, and one share purchase agreement for transmission projects are yet to be executed with National Highway Authority of India, SMVD Shine Board, and REC Power Development and Consultancy Limited, respectively. As on the date, the company has decent mix of 36 BOT projects, of which 10 are operational, 13 are under construction, and 13 projects are awaiting appointed dates. We are constantly working towards diversifying our portfolio, thus reducing vulnerability to functions in any single market or sector and enhance long-term stability for the company. As of 31st December 2023, including order book value of rupees 572 crore for two L1 projects, the company's order book value stood at 19,253 crore rupees, which includes the executable order book value of rupees 9,632 crore rupees. Roads and highway development projects have the 83% share in the order book. Moving on the quarterly financial highlights of the company, on the standalone basis, during Q3 FY24, the company has recorded revenue from operations of 1,806 crore rupees as against 1,898 crore rupees during the same period in the previous financial year. The EBITDA margin stood at 12.62% as against 14.58% during quarter ended December 31st, 2023. Moving on the sector highlights, the Government of India has proposed to raise the capex target by 11.1% to record rupees 11.11 lakh crore for the next fiscal year. The expansion of the capital expenditure outlay by 11.1% for FY25 will greatly bolster economic growth and boost job creation by further powering the infrastructure sector. The government has continued to maintain its focus on infrastructure development in the country, which saw MoRTH getting record high budgetary capex allocation of 2.72 lakh crore rupees, reflecting a 5.50% increase from the previous year budget of 2.58 lakh crore rupees. It appears the government has been more cautious in awarding projects where the land acquisition and associated permits are not in place, as a result of which till December, MoRTH has awarded 3,111 km of highways compared to 7,123 during the same period of FY23. So the ministry is hopeful the award may still end up over 10,000 km this year, whereas we are little apprehensive on such target as window available for bidding is too short, given that model code of conduct may kick in any time. We expect the pace to pick up under the new government that would start to implement Vision 2047 program, where 40 to 50,000 km of access control highway are proposed. Government's vision is to double the average travel speed from existing 40 km per hour to an impressive 85 km per hour, and the ambitious plan is likely to cost around 20 lakh crore rupees. For the year 2024-25, the government has allocated a capex budget provision of 2.52 lakh crore rupees for the Ministry of Railway, indicating a 5% increase from the previous year's budget of 2.40 lakh crore rupees in 23-24. Railway Ministry has also announced to develop 3 major railway economic corridors, and hence it also opened up the door for us from growth perspective, concluding the ratio of capex to GDP, which rose to 3.3% for FY24 is estimated at 3.4% in the new financial year. The government has increased the plan for the infra spending in ensuing financial year, and we are hopeful of adding decent share to our order book. We continue to tap on different opportunities emanating from the aggressive infra growth plan of the government. That's all from my side today. Over to you, Anandji, for updates on financial position of the company. Thank you.
Thank you, sir. Thank you for giving me this opportunity to take all the investors and audience attending the call to take through the financial highlights for the current quarter of the company. So our standalone revenue from operations for the quarter ended December 2023 decreased by almost 92 crore, approximately it is 5% year-on-year to 1806 crore. This decrease was primarily on account of delay in declaration of the appointed dates in the new HAM projects which we won last year and year before. Our consolidated revenue from operation has also decreased by almost 58 crore, approximately 2.6% year-on-year to 2,134 crore for the quarter. Reason for such decrease has already been highlighted by India Commission. Our standalone EBITDA margin has decreased to 12.62%, as mentioned by Shivendra sir, in quarter ended December 2023 from 14.58% in the quarter ended December 2022. This decrease is primarily because of the increase in staff costs because of delay in appointed date and reduction in the realization of the operating revenue. Our EBITDA margin at group level has also decreased to 23.70%.
Hello, sir. Ladies and gentlemen, we've lost the management connection. Request you to stay connected while we rejoin them. We have the management line back on call, so you may please continue.
Yeah, sorry, probably we got disconnected. So I was talking about our standalone EBITDA margin has decreased to 12.62% in the quarter ended December 2023 from 14.58% in quarter ended December 2022. This decrease is primarily because of the increase in the staff costs because of the delay in the appointed date and reduction in the realization of the operating revenue. Our EBITDA margin at group level has also decreased to 23.79% in the quarter ended December 2023 from 27.14% in the quarter ended December 2022. Our PAT margin at standalone level has also decreased by 10.77% to 155 crore in the quarter ended December 2023 as compared to 174 crore in the quarter ended December 2022. And PAT margin at console level has also decreased by 25% almost to 243 crore in the quarter ended December 2023 as compared to 323 crores in quarter ended December 2022. Our standalone net worth is almost at 5,706 crore at the end of December 2023, which was 5,215 crore at the end of fiscal 2023. Our net worth on console level is around 7,050 crore at the end of December 2023, which was 6,265 crore at the end of fiscal 2023. Our total standalone borrowing outstanding at the end of December 2023 is around 900 crore, 898 crore more specifically, which includes short-term borrowing of 200 crore, with debt to equity of 0.16 times. Our total consolidated borrowing outstanding at the end of December 2023 is 6,988 crore, with debt to equity of 1.01 times. During the quarter, company has made addition to the fixed asset amounting to rupees 38.6 crore. A net block of property, plant and equipment, intangible asset, which includes CWIP, is rupees 1,090 crore at the end of current quarter. Investment in our subsidiary companies in form of loans as well as an equity is rupees 2,399 crore. at the end of December 2023. This was rupees 1,949.8 crore at the end of fiscal 2023. Balance equity contribution to be made for our operational or under construction HAM projects, or other power transmission projects is rupees 2,120 crores, which is to be increased next 2.5 years of time, of which we are expecting around 150 to 200 crore to be infused during the remaining part of the fiscal 2024. Our working capital days at the end of current quarter is 97 days as compared to 104 days at the end of fiscal 2023. Our trade receivable at the standalone basis is around 1,357 crore at the end of December 2023 as compared to 1,880 crores at the end of fiscal 2023. Our trade receivable at the consolidated levels are rupees 290 crores at the end of December 2023 as compared to 462 crores at the end of fiscal 2023. Our unbilled revenue at the standalone basis is rupees 915 crore for the current quarter as compared to rupees 894 crore at the end of December 2022. Our unbilled revenue at the consolidated level is around 325 crore at the end of December 2023 as compared to 425 crore at the end of December 2022. Our inventory levels are at 838 crore at the end of current quarter as compared to 884 crore at the end of fiscal 2023. Our cash and cash equivalents at the standalone basis is around 401 crore at the end of current quarter as compared to 242 crores at the end of fiscal 2023. Our cash and cash equivalents at consolidated level is around rupees 815 crores at the end of current quarter as compared to 779 crore at the end of fiscal 2023. Mobilization advance outstanding at the standalone level at the end of December 2023 is around 248 crore as compared to 272 crores at the end of fiscal 2023. Our order book at the end of the quarter is around 18,680 crores, which excludes L1 projects, two L1 projects for 573 crores approximately. That's all for the financial highlights for the current quarter of the company. I sincerely thanks all our stakeholders, including employees, business partners, vendors, bankers, auditors, who have supported the company in its throughout instantly. On behalf of GN Projects, I thank everybody for attending the earnings call. So may I request the floor to be open for question and answer, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. First is on the execution. So
I request you to use your handset mode. Your sound.
Is it better now?
Yes, please go ahead.
Yeah. Sir, so in 9 months, our revenue has declined at standalone level by 10% So, and we were looking at 5 to 10% kind of or 0 to 5% kind of a growth for this year. So how we can look at the fourth quarter and given the AD is pending for 13 odd projects. So when the AD will come and how one can look at the FY25 revenue and at the same time the order inflow. So how much on the EPC terms we have received till date and how much more we can expect by March, and for FY25 whatever the loss or less inflow, how much more we can expect in FY25.
Yeah, so that is true that our turnover or operating revenue has declined. And as already mentioned, that is because of that. What we were expecting is the declaration of appointed date for the new projects which we got. So far there was a delay, and this time probably the ministry or government is quite certain in terms of giving the appointed date without getting the land properly acquired or without having that all permission or approval, in place. They are not giving, so they are not taking any chance basically, and hence it's a delay into getting that appointed date for the projects which we already won. Yes, I mean we'll try to catch up, but yes, of course it depends on how and when that appointed date is being declared. What we expect that for next 2 months of time we'll be having the appointed date for at least 5 or 6 projects. We'll be having those appointed date in place. And yes, our guidance was that we may be having kind of 5% of growth in terms of our operating revenue, but yeah, we may end flattish or maybe 4-5% lesser than what we have achieved last year because of the not declaration of the appointed date. And as far as this order book is concerned, we have been, what we were thinking is that the government would be, and that the way the government was also positioning is that they would be, coming up various projects in the month of, or at least before that model code of conduct kick in. However, we haven't seen that come actually that has that converted on the ground in that manner. And what we believe is that though government is claiming that they would be awarding around 10,000 kilometers of the road projects in the current financial year, we are little apprehensive in this regard. Maybe when this new government came into power, they formed a new government. Probably they would be picking up in terms of the awarding activity will be picking up in next financial year only. So for FY25 again, I mean depending on how and when we'll be getting that appointed declared for the existing project, our turnover would be in the range of same what we achieved in the current year, maybe 5% even lesser than what we have achieved in current year. That's the case. Yeah, please.
Sir, just to clarify, so we are looking at 0 to 5%, 5% kind of a decline in FY25 revenue also.
Yeah.
Okay. And second, in terms of inflow, how much are we looking at? So by March, obviously, whatever. So if the government delays the awarding, so even if how much we are still hoping to get, how many projects value we have bidded, and for FY25, how much value of projects are we looking at to win?
See, pipeline is strong enough. So what we are targeting is going forward in terms of pipeline, there is almost 185,000 crore of kind of road projects is already there in the pipeline, right, which includes both EPC, all the projects, EPC, HAM projects and BOT. And then roadway projects are also there. So there is a strong pipeline in terms of visibility of future upcoming bids. It's almost 2 lakh crore of bid which we are targeting. And depending on maybe for the current year, depending on how fast that government pick up that awarding activity in the current financial year, we are targeting for at least in current financial year we'll be able to get more, at least 4,000-5,000 crore of projects in the current financial year. Of course, subject to that awarding activity being pick up by government more or any other agencies. But for next financial year, yes, of course, our target would be in the range of 15,000 crore of the order, which we'll be getting by bidding the almost 2 lakh crore of pipeline, which is visible.
Okay, got it. Yeah, got it. Just sir, what's the value of these 13 projects where AD is pending and 5-6 projects where we are expecting the AD by March? So what would be the value? So I'm asking the EPC value.
So pending is almost 9,300 crore of the order, 9,200 I would say, 9,200 crore of order where the appointed date is to be declared. For next, for the current year, the appointed date which we are expecting would be again in the range of 4,000 crore of the project. We are expecting will be having that appointed declared for the current year.
Okay. And in terms of just 2-3 points, so trade payable on standalone as on December is how much?
trade payable on standalone basis, right?
Right, sir.
Yeah. 926 crore.
926 crore. And in terms of the out of the total data 1367, how much is the SPV hand debtors?
It's 1100 odd crore.
Okay. Thank you and all the best.
Thank you.
Thank you. We have a next question from the line of Alok Deora from Motilal Oswal. Please go ahead.
Hi, sir. Good afternoon. Sir, just if you could just repeat the number FY25 on the FY24 revenue, which is expected to be 0 to 5% lower. On that, we are looking at 0 to 5% growth in FY25.
No. That would be flattish. FY25 would be kind of flattish or minus 5% probably, I would say.
Okay. So 24 is again minus 5% and 25 again will be minus 5%.
Yeah.
Okay. And so sir, this project awarding has been pretty muted now. Again, I think we had revised our guidance previous quarter as well on the order inflow, and now again we are looking at very limited number of order flows. So how confident are we on these numbers which we just spoke about in terms of order inflow? Because it's hardly any time left now. I mean, 2-3 weeks now for the ordering to happen. Any bids you have bid for, any project you have bid for where it's to be open, any quantum you can provide?
So there are projects where results are yet to be declared, but see, pipeline is strong, and so far we have almost 8 projects where bids are yet to be open. Out of that 8, 7 projects are under road sector, almost 5,500 crore. But for FY25 order inflow, we are confident we'll be getting more projects because pipeline visibility in terms of future projects where we'll be participating is high, right? It's all because of that election year and the government not yet started awarding activity for different reasons. However, they have been claiming again and again that they will be achieving their target for the current financial year as well. But because now, as you rightly mentioned, that the timeline remains very slow, so we are also little apprehensive in terms of the current year awarding activity. That's why we are not expecting, we are not betting much on to current year awarding. Yes, but for next financial year, we are confident we'll be getting more projects.
Sure. And sir, this your standalone margins are now at near 12.5, 12.6%. Which you mentioned is because of the slower pickup in execution. But next year again we are looking at almost flattish execution. So is it fair to assume that your margins will be at current levels only next year as well?
Right. We can assume because see, we have got almost 8-10 projects which we were expecting that appointed date will be declared by December or January somewhere. But so in terms of mobilization, of manpower, machinery, we are already there, and we are just waiting for that appointed date to be declared. And hence, this cost has been, this increase in cost is reflected into our margin. While my margin has been decreased because of that reason solely, which I believe, right? So going forward again, because what I believe is that once this government again came into power, they would be focusing, with, I would say, some strength for infrastructure execution, all that, and will be able to catch up even. But because we are not having open order book with us, which is left right now. So what we believe is that maybe we not be growing in terms of our turnover, and hence may not be able to get that kind of margin.
Got it, sir. Yeah, I think that's all from my side. Thank you and all the best, sir.
Thank you.
Thank you. We have a next question from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. Just wanted to check your outlook on BOT. Would you be keen to participate? Are you looking at participating with any?
Mr. Krishnan, may I request you to use your handset mode, please?
Yeah, can you hear me fine now?
Yes.
Yeah.
Yeah, I just wanted to check if we were keen on participating on BOT projects and, what is our view? Would we do it with a JV partner or, how are we thinking? Because we are not seeing any awarding happening on the EPC or the HAM side.
So we are keen, of course, on BOT, but not maybe that aggressive. If it suits our, profitability metrics, probably certainly, or IRR metrics, will certainly be keen on the BOT projects, and which we believe that government is focusing more on BOT going forward. They also want higher participation of the private players, and where we find that we have ample opportunities to participate. And yes, and so far this, as far as this JV partner is concerned, as of now we are exploring, but yes, we are evaluating those more also. Though yet not finalized, but we are actively, evaluating this BOT opportunities.
So out of the 2 lakh crore pipeline that you mentioned, how much is EPC, HAM and BOT roughly?
See, BOT is around 35,000 crore of the BOT.
Okay. Okay, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. My first question is that in the last call you had said that you will look at a strategy of diversification. So any update on that? So beyond roads, are you looking to diversify? Any decision taking there?
So yeah, we are continuously evaluating the other opportunities in the infra sector only, and because of that strategy only, we got more projects. I mean, so we have completed one transmission project, or about to complete that transmission project. We got almost 2 years back. Now we have taken one more transmission. So we are actively, we are active in diversifying another sector also. So that's the and result of that is that we are into MLP, multi-mode logistic park, or we are into transmission, or we have got one ropeway projects, right? But what has happened is that awarding has not been that quick, or I would say the pace of awarding is not up to the mark, and hence we couldn't get much of the projects into in those sectors. But yes, we are actively looking at those others, other sector which is apart from road.
So in these sectors will not give you that kind of a scale, but if you see the union budget, large part of awarding sectors are railways, water, so defense, the buildings, some of these segments. So what are your thoughts of basically getting yourself eligible to bid for larger total addressable opportunity in the bidding in the EPC segment beyond road? So more, I would say, mid to longer term. So how do you see the opportunity arising in these segments? Because T&D can give you some opportunity, but it's very capital intensive. You have to invest equity and then look at monetization. But more on the EPC side, to balance growth, I mean, your guidance is decline of next 2 years. So, but if you have to come back on path to growth, so diversification is very important at the current scale. So, how do you see the opportunity arising for yourself? Will you ever evaluate these segments in your overall strategy of diversification?
No, so basically it takes time actually to evaluate, and in last 2 years we diversified into different sectors, and too many sectors we have entered into, right? And though we try to diversify, we try to get more projects into railways segment, railway sector also, but not much awarding has been happening into railway sector. Though the budget has been increased for railway, and we are actively pursuing that railway sector as well. As far as this building sector is concerned, that is also under evaluation, which and it may take time, probably another 3 months, where we have to finalize our strategy, how to enter and when to enter on those sectors. But yes, we'll be targeting more sectors going forward. Yeah. And you rightly mentioned that the ropeway may not be, in terms of ropeway, we may not be getting that kind of big EPC opportunity. Yes, of course. But transmission, where we believe that we'll be having enough opportunities, and again, water and building, which we continue to evaluate, maybe taking another 3 months of time, where we'll be concluding our strategy in terms of how to and when to enter into the sector.
Okay. And so you said that pending equity. What was the pending equity requirement of the portfolio? I missed that number. So
2,100 crore.
2,000?
100 crore.
Okay, 2,100 crores. And just on the last thing on the margins, I mean, we have been for the similar scale in the past doing better margins. So just wanted to understand in this quarter, what was the mix of HAM and EPC in the revenues? And the residual order book, do you think as the ADs come in and more HAM projects move into execution, there is a scope of margin reverting back to 14-15%, which we have been guiding earlier?
Yeah, so my revenue mix would be around 75% is coming from HAM only, and balance is EPC, because as of now in my order book, you'll find that most of the projects are under BOT or HAM mode only. That is one aspect. And second, because see, ultimately I was supposed to, because I am working at the same level where I was working almost 2 years back, right? So to that extent, my operating leverage is, it's actually working against me. Though we have been trying to get more and more projects, we have been trying to get to diversify into different sectors, yes. But and in the current quarter itself, I already mentioned that because of extra salary cost, I would say staff cost, extra deployment of manpower, where I mean we were anticipating that the project would be having appointed date, will be getting that revenue realized from those projects. We couldn't get that revenue realized, and hence it is hitting my margins. So yes, of course, when we'll be back to our normal speed, I would say, where we'll be clocking almost more than 2,000 crore of the revenue for the quarter, certainly our margin would be in the range of 14 to 15%.
And in the next few quarters, will we reach 2,000 crores? I mean, is there line of sight?
Yeah. I mean, yes, of course, maybe. So there may be disruption in 1 or 2 quarters for next, let's say, for the next financial year, probably 1 or 2 quarters, we may, see, or we may witness less than 2,000, but we expect that it should be back in the range of 2,000 crore of a quarter.
Okay. This is the last question, sir, on the BOT toll projects which are coming up for bidding next year. Everyone is talking about it. I mean, we have a strong balance sheet which is very, very under-leveraged, and we are also monetizing our HAM portfolio through the InvIT. So do you think, given the scale of capital which we may get, or the leverage which we can get on our standalone balance sheet, there's a huge scope of building a big or large order book in a less competitive environment where the bidders may be 6-7 bidders and with good IRRs? Do you think that scenario playing out next year, where you can have a large part of the 15,000 crore order book coming in from BOT toll projects?
See, as of now, probably what I believe is that, of course, we don't see that much competition into BOT sector, at least, because the limited number of players there will be participating into the BOT projects. But again, and we may not be having, I would say, maybe 60% of 15,000 crore, 50 to 60% kind of order book I may expect from that BOT. Again, subject to our due diligence of those projects and subject to satisfaction of profitability or higher level of that project. But yes, I believe that will be in advantage position to bid for more BOT projects.
And how will you exit the BOT projects after COD? Because this is quite sizable, 15,000 crores inflows and 60% is 9,000 crores of inflows from BOT. So does it include HAM projects also, or only BOT toll? And what will be the exit strategy here?
See, I mean, with whatever interaction we are right now having with the investors, right, there are so many investors who are willing to take BOT projects who are only eyeing those BOT toll projects only, who are not even interested for HAM projects. So there is a set of investors who are willing to invest into BOT toll projects only because they want to play the growth story of country, right? So I don't find any challenge in terms of exiting basically from the BOT projects, whatever we take. But yes, of course, that 50% at least I would expect from BOT toll projects only from the for the order book which I have given you the guidance, almost 7,500 crore out of that 15,000 crore we expect that project would be coming from BOT toll only, and maybe another 20-25% to HAM only. So yes, I mean we are aggressive. When I say aggressive, that means it suits our it's set into our this matrix of profitability and IRR sort of thing.
And we may have a tie-up something like IndiGrid, which we have for transmission asset. We may have a similar kind of a platform or back-to-back forward purchase agreements for BOT toll. I mean, are we looking and evaluating those kind of opportunities also?
Yeah. I mean, we are exploring all options. And let's say if we end up, doing that kind of tie-up, we may go even bigger in BOT toll.
Okay, sir. Thank you, and those were my questions, and wish you the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. The next question is from the line of Vikram Damani from Damani Securities. Please go ahead.
Hi, good afternoon. I just had one question. What is the latest on the proposed InvIT listing permission? Where are we on that?
Can you be a bit louder? We couldn't.
Hi, is this better?
Yeah, it's better. Yeah.
I just wanted to know where we are with the proposed InvIT listing. Has the SEBI permission come through? I mean, where are we along that way? If there are any updates, please? Thanks.
Sure. Yes, I think the asset monetization plan through InvIT is on very much on track. Last week, updated draft offer document has been filed with SEBI, and revert from SEBI is expected soon, sometime this week itself, maybe early next week. So with this timelines, I think we are good to go with launch of InvIT somewhere towards the end of this month or maybe first week of March, and conclude this InvIT within this fiscal itself, as stated in the last quarter's call.
Great, thank you.
Thank you. We have our next question from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So my first question is on the revenue guidance, which you highlighted as 0 to 5% degrowth in FY24. So if you look at the run rate, the Q4, can we have a 10% revenue growth? If at all I take 5% decline in FY24, is my understanding correct? Okay, we can see this 10% growth even with 9,000 odd crore of executed order backlog, and we can see a 2,200 crore of revenue in Q4, or we can see a lower number, because according to your guidance, we can see a 10% revenue growth in Q4. If you take 5% overall decline in revenue.
10%, you are saying year-on-year basis or what?
Yes.
So so I am not having a clear-cut number in mind, but 10% year-on-year growth is very much achievable. It's not a big issue for us.
Okay. So if you say that if you can achieve 10% growth in Q4, which is like more than 2,200 crore, then your margin, probably then you can get a margin of 14%, because with this in Q4.
Yeah.
Right? So so obviously I understand that for the full year we see suppressed margin because of the Q2 and Q3 numbers. But in FY25, what could be a safe run rate of margin, even if you achieve a flat number of say 7,700 odd crore? So is it safe to assume that you can easily achieve a margin of 13%, 13.5% in FY25?
At 13% we should target. And again, as I mentioned, that if we are able to cross 2,000 crore of revenue on quarterly basis, certainly it will be higher than 13%.
Okay. So basically in Q4, as you said, we can achieve more than 2,000 crores with a margin of 14%, and while in FY25, we can assume about 13% margin.
Yes.
In the on the top line. Okay. And sir, on the 26 number, if at all I can just go 1 year forward from 25. So if at all you have all the existing order backlog in execution phase, so what kind of growth you can assume or one can expect in FY26 on a base of FY25? Because if you assume a base of FY25 at 7,700 to 8,000 crore in FY25, what can be the run rate for FY26 in terms of growth?
I think we can achieve easily up to 20-25%.
Growth. Okay.
Yeah.
Okay. Got it. And sir, one more question from my side. So you said that I assume that you have received an inflow of more than 2,000 odd crores so far in FY24, and another 4,000 to 5,000 crore of inflows we are expecting in next 1.5 months. Right, sir?
Yes.
So, sir, what is the corresponding bid pipeline for this 4,000 to 5,000 crore? Because what I understand is you said 2 lakh crore which is for the next year, but what would be the corresponding bid pipeline in which you are expecting 4,000 or 5,000 crore, which is only roads, or it can be a mix of roads and other sectors also?
It's a mix of road, it's transmission, right? It's even roadway also. But then when I'm saying it is 2 lakh crore for the next year, I'm saying because the government has claimed again and again that they would be achieving target of their awarding target or their execution target, and in fact in the month of January itself, or Secretary Moth has again claimed that he'll be awarding. They are very much comfortable awarding 10,000 kilometers of the roads in the current financial year. But so far we haven't seen that anything happening on the ground. So But I am hopeful that if this happens, probably I'll be getting more, at least 4,000 to 5,000 crore projects.
So this 2 lakh crore is only from roads pipeline?
2 lakh crore is not only from road. So road, I already mentioned 1,80,000 crore is road, and 15,000 crore is basically transmission. And as we move forward, probably will be diversified to other projects also. Maybe a multimodal logistic or ropeway, or as the government plan is very much clear in terms of more projects, more ropeway projects. They have already identified 200 number of ropeway projects amounting rupees 1.25 lakh crores. So yeah.
And sir, the last question would be on the equity breakup. So you said 2,100 crore required, 150 crore likely to be invested, 150 crore in Q4. So what would be the balance breakup in 25, 26, 27? Equity investment?
Equity investment would be in the range of 700 crore on yearly basis, 750 crore.
Okay, on a yearly basis. Okay. Right, sir. And sir, on the last thing, sorry, just to ask on the BOT toll segment. So we, looking at our balance sheet size, we can go and bid independently. Right? We need not have a joint venture platform, but we can look for a flip model, as you said, like with IndiGrid, you have a flip model for power T&D projects. You can look for a flip model for the BOT toll projects, either through your own InvIT or through other large concessionaire. Is my understanding correct?
Yeah. So basically, idea is certainly will not be. Idea would be once that project would be constructed. Certainly, we'll try to flip. We don't want to hold that projects for 20, 25 years, 30 years, because some BOT projects are even having concession of 30 years, right? So certainly we'll be flipping it to some investors, maybe through our InvIT or some other vehicle, or to directly some other investor, depending on, because the InvIT would be again a listed platform where that InvIT team has to, in fact, that IM has to take that approval of the existing investor over there, right? So I can't comment right now on what is to be flipped through our InvIT or some other InvIT. But yes, of course, idea is to monetize those assets.
No, my point was, sorry to interrupt, that once you're bidding right now, so you'll be having some kind of a understanding, like how for India Grid you have understanding that if you're bidding for any power T engine winning, you will transfer to India Grid X number of projects of 5,000 crores. So anything like that you're working on right now before bidding?
We will be we'll be exploring that option as well, because it gives us, extra room for bidding more projects, right?
Yes.
So certainly we'll be, looking for those opportunities.
Okay, sir. That's it from my side. Thanks a lot and all the best, sir.
Thank you.
Thank you. We have a next question from the line of Vaibhav Shah from JM Financial. Please go ahead.
Thanks for the opportunity. Sir, what is the...
May I request you to use your handset mode, please?
Is it fine?
Yes, please go ahead.
Yeah. Sir, can you throw some light on the status of execution for hydro project and tunnel project? Have we started the work in third quarter?
Yeah, so we have started on those two projects, and for tunnel we are fully mobilized and we are getting good revenue also, and we expect to complete that project before time. That is one aspect for tunnel. And for hydro projects, of course, this is a long duration project, and we have already mobilized as per the requirement of the client or as per the requirement of the work to be executed over the period. But yes, of course, in hydro projects, there are one or two more entities which are working over there, and my scope of work would be, my work would be dependent on the existing companies handing over me that right of way or after completing their project. So to that extent, we are already mobilized over there.
So can we expect a run rate of around 20% per annum in the project for 25 and 26 in the hydro project?
Hydro, it is too early to say 25% on yearly basis, because once I have that, entire ROW with me and entire, I would say, because it is to be handed over to me by, previous contractor, right? So then only I'll be able to communicate. As of now, I don't see, unless until probably next 6 months of time, I'll be getting that all, I would say, ROW with me. Then only I'll be able to, comment on this particular piece.
Okay. So secondly, have you started the work on MMLP or AD is yet to come?
Yeah. So we have get the financial closure done for the MMLP, and we are in advanced stage. And we are in very advanced stage in finding that our operating partner for that MLP, because we are new in terms of operation of those MLP, right? And we are looking for that